Morning, everybody. It's the 21st of June. We are Signal Centre Talking Ball. I'm Joe Neighbour, joined by Steve O'Hare. Good morning, Steve.
Morning, mate. You all right?
Yeah, not too bad, thank you. And you?
Yes, not bad at all. Another
Good.
day, another dollar.
Indeed. Okay, a bit of an interesting start, and certainly a few headlines over the weekend which have impacted various markets, and we'll get stuck into those charts very soon. Just to sort of have a quick overview on some of the news today. We've got exit polls coming out of the French elections. They were quite disappointing for the two lead candidates, which was obviously the current standing president Emmanuel Macron and also the far right leader Marine Le Pen. Both had worse than expected outcomes in the first round of the French regional elections. Only 32% of the country, it's estimated, turned out, with some saying they didn't even know their elections were on. So that could help promote left-wing movements as they unite behind a candidate, something they've so far failed to do. So not a great look for France. In terms of what's going on between the US and Russia, the US is preparing additional sanctions against Russia for poisoning the opposition leader Alexei Navalny. That comes days after President Joe Biden said he confronted Russia's Vladimir Putin about his human rights violations and made it clear to him that Russia would face devastating consequences if Navalny was to die in prison. Pretty strong words from Sleepy Joe there. In terms of what's going on with the UK government signalled that it would keep restrictions on overseas travels in place. Justice Secretary Robert Buckland saying normal holidays were never going to be the case this year because of increasing COVID cases. Obviously, we appear to be maybe at the start of this third wave, and that's despite one of the world's most aggressive vaccination programs. So hopefully we can see some strong evidence of the vaccines working if we don't see a big old spike in the number of cases, which would be good. And in terms of then markets, we've seen European stocks sell off over the weekend. Treasury yields have tumbled as well. In markets in Asia plunged. We seem to be putting up a little bit of a fight back today, but there's also been some big moves in the cryptocurrency space. Just looking at the Bitcoin price this morning, that's already off by over 7%. So plenty for us to talk about, Steve, on the chart side of things. So let's get stuck in. What do you want to look at first?
I don't mind starting with cryptos first.
Go for it. It's getting close, isn't it?
Yeah, it's a bit sort of like, hello there, what's going on? Obviously, we look at the weekly chart that we've alluded to over the last sort of like couple of months, it feels. This right shoulder looks to have formed. So we can sort of like drag this in here. Formed a bearish engulfing candle last week. It's engulfed the previous week's price action, positive price action, so that's negative. Couldn't get above the 42,000 resistance level, which was the peak of the left shoulder, and we're kicking on downwards this week immediately. Like Joe said, we're down 7% on the day-to-day. On the daily chart, we highlighted an impulsive move lower, and we expect this to play out, and we're looking, really, for me, it's the next level of real support is around about 20,000, which, if everyone can remember, that far back was a all-time high for a good couple of years. So yeah, doesn't look too great on the crypto front. We've got the 4-hour chart.
Volume on that daily candle as well.
Yeah, here we go. The volume on the daily candle
should
just
be
here.
Across the news. Is there anything that's been said overnight? Has Elon done something?
He may well have done, but I'm sure the technicals would have sort of have been highlighting us to this. Yeah, and it's just sort of this is a 4-hour chart, this one here, that's sort of like showing you that this candle is sold off and on really high volume. So but we have got support below. Don't give up just yet, guys. We've got I like this level of support initially, 31,100. We've obviously got the 30,000 swing low as well, this arrow here, 1 2 3 times it's got down here. So what are we going to do? We've been down to just 33,000, well, 32,290 this morning. It does feel negative, feels like we're going to retest the 31,100, and yeah, for me, as I say, the real sort of test is around about 20,000. So that's that.
It looks like there's been a crackdown from China on Bitcoin mining.
Oh, right, yeah.
Which has caused this.
Yeah, that's the problem is obviously we've got the whole centralized part of the world trying to stop all this and then bring out their own coins. So plenty to look out for in the coming years and well, weeks, months, years. They're really sort of like trying to put a block on the cryptocurrency overall. On the going across to the indices, as Joe said, we've had a bit of a sell-off. Really, we had it on Friday, and we've sort of like it's sort of like overnight as well. We've opened a lot lower, but we're managing to sort of like have a little bit of a pullback as we speak. We've been down to 6,950 in the FTSE, and it's recovered quite strongly over the last hour or so. Levels to watch in the FTSE. If we go back to the weekly chart initially, where we should have started, we're talking about hanging man candle, but we now got a bearish outside candle. Last week's price action is very, very negative. So really looking into selling rallies this week, and we're having a rally right now. So maybe a little bit of opportunity early this week. On the DAX, similar sort of price action, bearish outside candle, and this is a real sort of like evening doji star formation, hanging man candle from last week, bearish outside, sorry, the week before, bearish outside candle last week, and we've had the breakdown straight away. We've opened around about the 15,460, and we've been down to 15,291. So we've had a 170-point move lower, and it's recovered all of that in the last hour. So trying to fight back aggressively, but for me, we've broken the resistance. Sorry, we've broken the support, and I think that's a forewarning of what's to come this week, especially with this ominous looking bearish outside candle. Dow Jones has been under pressure, and we managed to break below the 33,300 level, which was the swing low from the 10th of May week. So that looks negative. Testing this, let's see what sort of trend lines we've got going on here. That is basically telling us that we've broken the upward trending support line quite aggressively, and we've got this horizontal support, which is the next real target. That comes in at 33,230. So we're trading above there. So anything below there, go with the flow below. It looks really, really ominous. Bit of a head and shoulders formation really as well there. We can see how it's fought back in the last hour, getting up to some decent resistance level. 33,450 really sort of looks likely to cap currently. Nasdaq's not really having the same, not playing the game as well. You know, last week we had all-time highs, and this week we got off to a positive start. So the tech sector really sort of holding on as it has been in sort of bearish times for the normal market sectors that we sort of follow. S&Ps, again, these topping candles, hanging man and a bearish outside candle from last week, which has engulfed 3 weeks of price action, which is really, really negative. Again, fighting back this morning desperately, but we've broken the trend support, and for me it's a case of selling into rallies even up as far as 4,215, which will be just a retest of that upward trending support line. Aussie 200 last week posted a shooting star candle. So this can be confirmed this week if we get negative price action breaking below the support of 7,200. China 50 in an ABC AB equals CD correction, and we're looking to potentially target a measured move target of around about 14,500. Long way off at the moment, but we can see this has really led the way. I've been talking about this for a while now, that how China, I believe, is going to lead the way lower in these equity indices, maybe apart from Nasdaq, which seems to be bucking the trend all the time. So we've got Hang Seng as well. That's negative price action for the last 3 weeks. That looks set to continue we're on the back foot this morning, and Nikkei as well. This descending triangle formation has got support at 27,133, a break below there, and it opens up some type of vacuum move all the way down to 24,000. So negative on that. Let's see if we can get any respite out of commodities, which potentially we can do in oil. There's although again we talked about this doji candle forming last week, and we've opened up higher again. I did read some news headlines on the oil. I'll pick up on them in a second, but potentially we're in the fifth and final wave of this impulsive move higher. Doji candles formed last week, sign of indecision possibly, and we're opened higher this morning or last night, and looking quite good this morning, but I think we're running out of steam on this oil market. 76.80 is the real resistance level that I've highlighted for a long time now, but we're still a little way from there now, $5 away. Gold, what's going on in gold? It's really under pressure. The dollar index obviously pretty strong. This has had a negative impact on gold price. On the weekly chart, we're in this channel. I think it's a bullish flag. So really looking to buy dips. The major levels to look for: 16,075, $1,675. Trading currently at 1778. And we got support at 1755. A break below 1755 should really, or 1750 maybe, should open up another sort of like $60 move lower, which we've seen, and there's been we can see the sort of aggressive price action that gold has moved down with since we sort of like first notified people of this sort of topping rounding formation. The break at 1845, significant resistance now on the upside, and along with 1800, which we formed a bearish outside candle on the 4-hour chart when we retested that on Friday, but it said, no way, Jose, are you getting above here? We've got this supportive channel area around about 1760 to 1765, 1755 also coming in there. So yeah, break below there, opens it up. 1723 maybe first stop before the 1677 more the bigger resistant support level coming in. I think that sort of covers me there. I don't know if there's anything else that people want to see on the commodity front, but yeah, I can hand it over to you, Joe, on the FX.
Yeah, I think that all looks pretty comprehensive, Steve, and gives us a good flavour of what to potentially expect for the week ahead. So let's jump into FX. So obviously dollar index is where it's at the moment. That's sort of main story. As you can see here, we've taken out the downtrend line in blue. We've burst through this resistance at 91.43 pretty easily, really. We've not seen any retest on a pullback. That may occur at some point, but it looks as though it's going to continue moving higher. So I've got this red line as the target, which is 93.02. The reason I've got that is because there is an unfilled gap here between the 5th of April and the 6th of April on the dollar index to potentially target. So we'll have to wait and see what happens up at that level. Then if we can take out this 93.43 level, then potentially we've formed some sort of bottom pattern, probably a double bottom looking at the chart. So there being the first bottom, there being the second. You could maybe argue that this one there, so maybe a triple bottom. And then we start projecting higher prices on the dollar index over the more medium term. So this is the downtrend channel that it's been trading in since March last year. And you know, we've broken out of this wedge or channel, so you would now think we're going to continue to see this correction to the upside, and that certainly seems to be playing out at the moment. Looking at cable, that's broken down from the bullish trend channel. I expected to see some buyers come in here. This was a gap fill and also trend line support holding up at the same sort of level. Didn't really work. We've continued to see a continuation lower, and now we're looking for a test of this 136.70 level. If we breach this level, then we have a nice sort of double top formation that's taken shape. So the high here from the 24th, and obviously a number of attempts at trying to overcome this level here. If we complete this pattern, we then measure the move from the highs to the neckline of what we're proposing as being a double top, and then we are projecting a move down to as low as 130.97 on cable over the medium term. If we look at euro dollar, which is the flip side of the dollar index chart, potentially a severe looking head and shoulders top pattern taking shape here on the daily chart. We've broken through all of these support levels, and now we're targeting the neckline of this setup, which today is coming in at around about 1.1768. I prefer to see a break of a horizontal level, so I'd be looking for actually a break of 1.1703 to confirm this top pattern. And if that gives way, then we can be looking at lower prices down towards 110.56, which is the measured move pattern from the head down to the neckline projected lower. So not looking great for euro dollar, and obviously that will be down to what happens with the dollar index in the short term. If we look at some of the other dollar pairs, this one is quite interesting. This is dollar CAD. These are the highs that we saw for that market back in March last year, around about the height of the pandemic. And since then, we've been trading in this trend channel or wedge. It's been getting narrower and narrower. We saw some bottoming type price action down here. We broke up through resistance, and now more importantly, we've broken out through the channel itself, and it's been quite a powerful move, quite an impulsive move to the upside. A series of green candles there, as you can see, and a bit of an uptick in volume. Maybe we'll see some sort of retest in the coming days before a continuation higher. This is the next level to target for me, which is up at 126.50. So looking quite good on that front. Dollar yen had been the place to go while we were waiting for the dollar index to make its move, but yen has sort of been seen as a bit of a safe haven as well, it would seem. So the two are sort of leveling off. Still a bit of underlying strength there from the US dollar, trading in a nice uptrend. We've got resistance at 110.96 to now target in the short term, providing that this trend support remains intact. If we look at some of the riskier currencies versus the US dollar, New Zealand dollar, we've drawn this sort of rounding formation pattern that's taken shape here. We've tested this key support at 0.6945. We did actually close below it on Friday, but we're having a little bit of a go at trying to get back above it today. So where we close today will be very interesting on that. If we do close below the support level at 69.45, then we are projecting a move over the medium term towards 64.27. So quite a bit of a deeper correction on that one potentially looming. And it's the same for Aussie. Again, this rounding sort of formation. We've closed below support here at 75.33. We haven't managed to get back above that today, so this is actually looking not good at all from a technical perspective. Yes, we've got some support on a Fibonacci basis at the 50% level, but I'd be looking to sell rallies into that 75.32 level today, and ultimately targeting a move down to 70.58. So some interesting opportunities starting to emerge in the FX world, and that's my take on it for the for today and potentially the week ahead.
Yep.
Having said that, we did both try to fade the dollar index move last week, given that the strength had been pretty good. I went short of dollar CAD on our gun to the head challenge, and Steve, you went short of dollar index, both of which were stopped out. So we go again today, and we've had a decent run lately. Let's just get the sheet up. So nice little uptick in the P&L, but a bit of a setback last week. But with the increased volatility, it's creating more opportunities for us in this style of trading. So let's hope we can pick another winner or a couple of winners today. Steve, what are you fancying? Anything?
I've got I feel like the indices are still maybe have a little bit more left in them before being the ideal chance to fade. On the gold side of things, I think again there is a sort of like maybe a revisit maybe to the $1,800 level before really I would look to fade that. So that's taking them two out the equation a little bit. Oil, I was reading that Iran could quickly export millions of barrels of oil it is holding in storage on oil tankers if it reaches a deal with the US on its nuclear program, and it's been moving oil into place to prepare for this eventual restart. So that could sort of like lead to a bit of a sort of like correction lower in oil. We seem to have sort of like stalled around this 71.88 level currently. This is like a 4-hour chart. So overnight we've sort of like spiked higher up towards 71.90. Problems. It's a bit of a toss of a coin, really. Indices. I would like to fade this little bad boy DAX. I've already tried to do it this morning, got a little bit of smack on the nose for it. So I am going to go with oil. I'm going to fade oil here. It's this 4-hour candle, bit of a dark cloud formation. So that's one reason to be negative. I'll keep the stop quite tight, obviously. Let's keep the stop around about $72. What does that leave us? So 72.04, I'm going to put the stop in. And we're going to look for a target of 69.04. So a bit of a reversal we're looking for, getting short at 71.44 on WTI crude oil on this chart. There we go. That's me.
Well done, mate. Good luck. Okay, I am going to try and fade the indices this morning. I did want to do the FTSE into this resistance here, but it's already had a bit of a move. But yeah, going to go with that anyway. So it's 7,005 at the moment. And I'm going to place a stop just above the highs of the day at 7,043. And I'm going to target a move down to the swing lows that we saw back in mid-May, which comes in at 6,822. So expecting something pretty drastic, 180 tick move from where we are currently. You never know with these things, and certainly there is a bit of volatility around, as we can see with Bitcoin, which is off by 7%. So that's going to be my trade of the day today, selling the FTSE 100.
Well done. Good luck with that.
Cheers. So in terms of what we can look ahead to today, we've got the Chicago Fed activity, National Activity Index today, which isn't particularly of much importance, I wouldn't have said. That's at 1:30. We've got appearances from the ECB Governor Christine Lagarde and also the Fed member Williams as providing the main highlights for today. And then we will ease into a week which will be dominated by PMI readings and also the latest Bank of England rate decision, which will be out later in the week. So a few bits happening. Nothing hugely impactful today, but obviously we are after a pretty volatile start, so markets are clearly a little bit on edge. That wraps it up from us, Steve, unless you've got anything else to add?
No, that's it.
Cool. All right, well, we'll be back tomorrow morning, and until then, trade safe.
Cheers, guys.
Bye-bye.